Good afternoon, everyone. How was the week? Was that satisfying? Yeah, the general direction. How about the results? Are you happy or not happy? I'm so happy. Happy. You know how it is like happiness is not so whatever it is now the results and we'll have to accept the results and go to make it. Yes. We hope that we can be. Whoever in power, we have a huge responsibility, huge challenge to overcome. Without the support of the people here, they won't be able to overcome. You can expect that the understanding is trying to do their level best, but we'll have to help, we'll have to contribute somehow. You all understand the situation of the country, you all understand the situation we are in, you must be actually you must be managed. Must be managed. The situation we are in now. If we are unable to manage this situation somehow within the next 3 to 5 years time, we all should understand the gravity of things. Even the economic condition of the country, foreign exchange, and all that, especially the debt that we have settled from 2028 onwards. Now we use the next 3 to 5 years the most possible way, most optimistic manner to face challenges that they are now. After last year, I'm in the back. We don't understand the real value of it, real consequences, repercussions, we don't understand. So, as professionals, we are also, we are already a professionals. We must realize this issue. And we all have to come out from it. It's challenging, it's very difficult. No one outside there will be able to do that. We have to do it. I was worrying. That's what many people were worrying because still as a country we haven't done something. We haven't put the right efforts. They're thinking that someone outside will come and solve the issues. That won't happen. They will assist us, they will support us, they will guide us, but there should be an effort come within the country. Organized effort to overcome this situation. Otherwise, we won't be able to. Hopefully, let's see now within a 3 to 6 months' time, there will be kind of plan how from the government side they are going to do it, what they expect from each industry, from each sector, each popular good, something like that. Otherwise, we won't be able to do. And unfortunately, we missed quite a lot of talented, experienced professionals here during the last 2 to 5 years, maybe. Usually, the last 2 to 3 years time. So fill that talent gap. I don't know how hard we have to go. That's the main velocity. Talent gap. Most qualified, experienced, great brains on the country. Still we have sufficient number. Still, just imagine we have the right people here to have overcome these events. That is the thing. That is how things are. You understand what I am doing? Especially sectors like healthcare, those financial professionals, IT professionals who are communicating like Srilanka, and then of course technical side of it, technology, technical side of it. We lost good talent during last 2 to 3 years. So we have replaced the others, and the other side to create some opportunities also. So upcoming people, upcoming there are more opportunities for challenges. Businesses, the market will slowly catch up, gradually catch up. Let's see. How many of you believe that IMF project, IMF program will support Sri Lanka to go forward? How many of you? I don't have an answer, right? I'm just asking your opinion. How many of you think IMF project will assist guide Sri Lanka economy? No one believes? Any financial professionals, accountants? What do you think about it? No idea? What do you feel about it? Because you as professionals should have an idea. Accounting professionals, because what do you think? So, an exam question. But what do you think about it? I love program in robots. What do you think? Hello? No, they have some ideas. Do you see any other alternative in a country like for a country like this that has faced a lot of such challenges? So practically there are no any other alternative. In a way for a country like this, this is the best thing that can happen. And now we have come to a point where no one, no any other approach could save us. So this is the only way out. So it is their support, their direction, their assistance to restructure things, reorganize things, and come out of it would be the only way to do it in a more focused manner. If you want to understand that clearly, then look forward, okay, see these are the options available, these are the tactics, then how, given the resources within the country and our local government, how we are going to do it. For many of us, these subjects, plus whatever subject we study, from auditing to accounting to econs to operations to finance, for many of us, not only for you, even undergraduates, masters students, for many of people here, these subjects are just subjects to study and get through the exams. They don't understand the hardcore of it. Subject is one of the current subject they are not like the econ microeconomics macroeconomics Dokter sebagai kita satu kita nama jika ibarat dua ya hari kita sekali kira ini kan dua ya gimana kalau kami pakai sana these different subjects gives you relevant more subject knowledge concepts and the current practices and all so you as professionals should understand things differently now get internalize things and have a different way of thinking now purpose of the study cycle. But for many, not only you, many undergraduates, many people, for many of us, even in academics, for us, there are a good number of Are you getting this? Subject is separate, and that is not what they believe. Not be. To believe in a subject like economics, you should be able to understand the rationale, how things should be sold according to those principles. So, as for instance, management, now we discuss certain theory part, concepts. You should be able to apply them appropriately and overcome the problems, solve the problems. That's the purpose of it. If you have studied marketing, you should be able to look at things from marketing angle and solve the problems. And understand. So, as a BSc accounting specialized student, right? Right, accounting students, you have kind of good understanding about how the at least how business organizations should overcome their problems, and at the same time, economic problems, country problems. You have an idea. When you start working with companies, middle level to higher level, they are supposed to bring you ideas. They are supposed to share your thoughts. Management meetings, board meetings. Slowly but gradually, you are developing yourself to represent your ideas and those books. You say this, I very ready. How when no? Managers are very ideas. Any experience, any in that. Any other, I will develop here. Update it. Then, we come to make it as a balance, make it improve it. Capacity management capacity then you will be recognized. Wherever you go, you will be recognized. Overall idea का clear है हम जाए और बड़ा इतना लेवल अलग करने वाला है क्या लेकर ना के मानने हैं ini तेरे लोग लगे बोले कोई ini वाले यहाँ भी आया वहाँ पे भी ada HR side itu ada di production side manufacturing side itu kalau ada di econ side itu finance side this kind of things. Anyway, let's quickly go back to the topic. Last time we were talking about this important area of manufacturing operations management. That was production planning, isn't so? In fact, I told you I will not repeat the content. Well, I will not, because we run short of time. So I will skip all these things that we discussed the other day. We were talking about production planning, right? There we identified the planning horizon and planning process. So we were somewhere here, what we call intermediate term planning. Do you remember? Medium term. That means 3 months to 9 months, 12 months period. So there is this planning activity, we call it production planning. Now that begins with a planning activity, we call it SNOP, SNOP, followed by the main planning process, we call it APP, aggregate production planning, of which we already discussed, right? And then what we discussed there was in an aggregate production planning, what happens? Hope you remember, by considering the market demand and various other factors, in aggregate production plan, they specify the production quantities for each category. Not sometimes for individual items, but mostly for broad product categories, they specify the production rate, and for that, the workforce level, and for that, inventory on hand to meet the future demand at minimum cost. Minimum cost. Right. So we identified what are those three, and then when it comes to cost, these different costs, and accordingly using these inputs in the planning process, like demand forecast, and then other available resources such as inventory levels, current workforce, production rates, available capital, and then of course other capacity adjustment techniques. At the output of planning process, we get APP. There they specify these three things. What are the production rates to be maintained, and for that workforce and the inventory levels, and what is the cost of the plan. Those are the outputs of planning. So this is where we stopped, I guess. Any quick questions up to that point? Is it clear? What we mean by production planning, the context in which planning is taken place, and these planning techniques, the planning activities. This is where we stopped as an activity. Is it clear? Anyone who was not here last week? So, quickly follow it, right? We will understand. No questions? No doubts? Can we move it? Right now, coming to these this input. Right now, we need to know about when it comes to production planning. We should know what are the other capacity alternatives available and their costs. Right, and for that, businesses will have to make decisions on these different questions, different strategies. Now, whether we use inventories. Should inventories be used? And then, of course, should the workforce level be changed? Varying size of workforce. You will understand what I am telling you in the next 10 to 20 minutes time. And the third alternative or third strategy, should part-timers be used? Or some other workforce alternatives like use of overtime, OT, or slack time, or idle time to absorb fluctuations, or any other capacity alternative like use of subcontracting, or maintaining stable workforce, or use some demand management techniques. Right? Demand management techniques like price changes to influence the demand. Right? So, what are the appropriate strategies to be used? That you will have to decide. So, these are the different capacity options available to be considered in aggregate production planning. Sometimes we decide to use workforce strategies like hiring more workers, hiring more full-time workers, or hiring more part-time workers, or laying them more. So we call them firing. Discontinue sometimes even permanent workers or part-time workers. That is one adjustment when it comes to workforce level. And when it comes to use different other workforce levels like overtime or slack time. Right. Overtime, you know the meaning, right? In addition to regular production hours, use additional hours during the demand period. So as slack time is the opposite of it, when the demand is decreased, you reduce the regular working hours, let's say 8-hour schedules, into 6 hours or 4-hour days. Slack time. To reduce the work capacity. And at the same time, use of inventories. Inventory techniques. One is using finished goods inventories. That is the main inventory related technique, inventory related capacity option. In addition to that, there can be other options. Some businesses are ready to employ. We call it backorder the demand. Backorder. I think this is not new to you. Backorder. When there's a higher demand than your supply, so you negotiate with your customer not to deliver immediately, but later. You accept the order and tell them we are not going to deliver the product immediately because we run out of capacity. We deliver later. That's the inventory option. When you run short of stock, we call it back order. Sometimes businesses consider this and accordingly do the costing and take the plan and issue. And the third option related to inventory is lost sales. They just ignore the quantity that you cannot supply to the market and consider it as lost sales because nothing can be done. Your stock is not enough, customers are not ready to accept late deliveries, so you just ignore it because you cannot supply. Lost sales. So likewise, at the same time, there are some other capacity options to be considered in making this decision. We call it subcontracting. That is, you use your competitor's capacity, someone else's capacity to produce the product for your orders, right, and using their capacity. Subcontracting. Let's say government factories, okay, let's say within many days they have to supply 1,000 units, but their capacity is 800 units. So they lack 200 units capacity per month. So sometimes they might come to an agreement with another supplier and give this remaining quantity 200 as subcontract. They use it their factory, their workforce, they produce on behalf of us. You subcontract. This is temporary arrangement. So, and considering this, you will have to plan the production. Okay. So, considering them, now how these production planning activities are done, that is what we try to understand. And for that, I mean, each of these options, their expenditure, the costs are different, so that we are carefully consider when making these aggregate production plans. Right. I'll come back to this a little later. What are the strategies available? What are the techniques available for aggregate planning? But I will start with this one, trial and error method, and discuss here with you what are the different aggregate production planning strategies that we consider. Focused strategies, strategies. So when it comes to strategies for meeting the market demand, we identify these two main strategies. We have already discussed this, but I will remind you how that is related to this. So these are the two main alternative strategies available for manufacturing firms to prepare their aggregate production plans, medium-term production plans. In addition to these two, there is third one, we call it mixed strategies. Right? Now, which strategy to select depends on various other factors, especially these factors. Right? I will explain. Right? Now, let's take the first one. We call it level capacity strategy. You know the meaning of it because under capacity planning we already discussed about it. But I will explain it here how that is used for aggregate production planning. Level capacity planning. Level capacity strategy. Right? Little more information is provided here. In manufacturing, it happens in a way like this, right? I will come back to this slide. Now, assume, as in slide number 33, now the demand for your product category would behave like this over a period of time. The units demanded may vary. Now, you should have a plan as to how you are going to supply. That is what we call aggregate production plan. Now, coming to this option, level strategy, as the term tells you, level, that is constant. Constant. So, you decide a constant production rate throughout the period. That option is called level production strategy. Okay? Demand may vary over a period of time, but your production rate is constant. So how that would help you to meet the market demand? Well, you'll have to design that production rate that you will continue throughout the year, throughout the period, and there will be certain months, certain period where your production rate is higher than the market demand. See, your production rate is higher than the market demand. Market demand is low here. Can you understand? But your production rate is higher than that. At the same time, there can be periods your market demand is higher than your production rate. Again, another period here, production rate is higher than the market demand. Likewise. Hello? So how this strategy would help the factory to meet the market demand efficiently? Well, in this method, it's through inventories. Factories can do that. But see, through inventories. You will understand. If you'll be able to understand this better, if you were here last week, because we discussed most of those details there. Right? Anyway, if I remind you again, level capacity refers to this condition. It refers to maintaining a steady rate of regular time production. Steady rate, constant rate. While variation of demand variations with these strategies by holding inventory, by keeping inventory, or by backordering the demand. This is the most common option available. In addition to that, sometimes we can consider the amount that we are unable to supply as lost sales, and occasionally using overtime and subcontracting if that is possible. But mainly using the inventories. So under this strategy, the main production planning cost, so the cost considered is inventory holding cost. If we consider the back ordering cost, we need to consider that one too. And if we consider, since we don't consider workforce adjustments, these costs would be minimum. Cost of hiring, cost of training, cost of firing, regular time workers would be minimum. With an example, you will understand it. If we use overtime and subcontracting, the costs relevant for them would be relevant, but that would be very rare and occasional or very low. Only if we use that is relevant. So with level capacity, as you see it here, market demand is supplied through same production, constant production rate, according to the production cost. Now, some important equation to be considered here, given in slide number 34, how to calculate the ending inventory. So, ending inventory for a period T equals beginning inventory at the beginning, and then the production rate during the period and the demand for that period, if there is any quantity. So when you have positive inventory at the end, right, we consider it as positive inventory. If it is a negative one, lower than 0, we consider it as backward. Quickly understand it with an example, you will clarify your doubts. Since this is new to you, since you have not involved in this kind of decision, it is new. But when you put little effort, you will understand. Then to calculate inventory cost, we need to know the average inventory, and for that we use beginning inventory plus ending inventory divided by 2. And then of course we can calculate the inventory cost. When there are back orders, that means ending inventory lower than 0, we consider it as 0, not the minus value. With an example, you will understand. If you have to calculate the back ordering cost, this is how we do it. We charge cost proportionate to the number of back orders at the end of the period. If you have to consider it. With an example, you will understand. Right. Assume now we will use this simple example to understand each strategy. Now, with this, let's see level production strategy. You will be given some information like this. The demand for the next period, now in this case, for the next 4 quarters, category demand forecast is given. For the quarter 1, 80,000, quarter 2, 50, 3, 120, likewise. Another production planning related details and costs are also given here. With exam questions, something similar will be provided. You need to understand, okay, for level production strategy, how to use the information and do the calculations. Next one is chase demand and how to do the production planning and how to calculate the cost and recommend the best one. Likewise. Is that clear? So let's first try to understand how it happens to level capacity strategy. So this is the information given. Check that you can understand. Demand forecast is given. Hiring cost is given. Employee hiring. $100 per worker. Firing cost. To discontinue the contract with one worker, there will be additional $500 per worker. But these two are not relevant for level strategy because they are not going to change the production rate. Inventory carrying cost is given here, $0.5 per pound per quarter. Regular production cost per pound, $2. Production per employee, 1,000 pounds per quarter, and beginning workforce. So we'll have to select the important information here and do the planning for level production and then set the cost. Now, for this, we need to use a template like this at least and do the production. First of all, we have to identify what is the constant production rate, level production rate. And for that, the simple calculation we do is we add the demand forecast for the next 4 quarters together and divide it by 4. Right? Because that average production rate should be equal to the average demand at least. Right. To get that, we add the demand forecast together for each quarter. 50, 80 plus 50 plus 120 plus 150 divided by 4, and that comes as 100,000 pounds. So that is the level production or the average production. Is that clear? That's simple. This is a very simple example for this product. What this 100,000 means then? 100,000 means per quarter. This is the output rate, production rate. Would that be varied from quarter 1 to quarter 2 and to 3 and 4? No. The same quantity will be produced in each quarter, and that is called level production. Is that clear? I hope so. So to prepare the production plan, we use a simple template like this. For each quarter, what is the sales forecast and what is the production plan? Accordingly, whether there would be inventory or of sales or back ordering, based on which we do the production planning cost. Right. Can we move forward to see the production plan? Right. Now, coming to quarter 1, right? This is the complete answer that's given in the handout. So just understand it. Now, what is the demand forecast for quarter 1? That is 8,000. From where I am looking? From here. Now, according to our calculation, what is the quarterly production? That is 100,000. So, during the quarter 1, demand is 80,000, production is 100,000. So, at the end of the period, what is the inventory remaining? The gap between those two, that is 20,000. Is that clear? Moving to second quarter, the demand is 50,000. How about the production rate? That is constant. The same average demand we are going to produce. That comes as 100,000 units. So at the end of second quarter, what is the remaining amount of inventory? From the previous quarter, we got remaining 20. During the quarter 2, another 100,000 will be produced, but will be consumed only 50,000. Whether that is LIFO method, FIFO method, whatever. At the end of the period, there will be remaining items of 70,000 units. Clear? That is the production plan. Coming to third quarter, the annual quarter demand is 120,000. Within the same period, what is the production plan? Produce the same 100,000. Level demand, the level production. So, can we supply this 120? Quarterly demand is only 100,000. Yes, we can, because we have some remaining items in stocks, inventories. So, quarterly production plus inventory items we can use, and at the end of the third quarter, we will have only remaining inventory 50,000. Coming to the last quarter, sales forecast will be 150. The same period, same quarter will produce 100,000 units only, but the remaining 50 can be supplied using the inventory. So that at the end of the period, inventory becomes 0. This is a very simple hypothetical example. Only one product category and only 4 quarters, right? And no any other options like back ordering and other options we have not considered. So in such a case, this would be the production plan. Understanding? How to supply the total annual demand for 100,000? 1,000, 100,000 unit each one. Now to calculate the cost of this plan, we should consider the production cost, that is 400,000 units per year, and here it says regular production cost per unit per pound, $2. So for that, to produce the total of 400,000, this is the cost. And the next cost item relevant here is the inventory cost. How to calculate the inventory cost? Now here the equation was given, right? Now we have to get the average inventory and multiply by the inventory carrying cost. Now information is provided here. Inventory carrying cost $0.5 per pound per quarter. So we get the answer here, total inventory in each quarter, these quantities, so the total of 140. Can you understand it? And for that, $0.5. So when we maintain the production plan, according to level production strategy, this is the total cost of production strategy. Is that clear? So likewise. What is that strategy? Level production. Level production. In level production, what is the main characteristic? The production rate is constant, steady in each period. In this case, that is 100,000 units per quarter. Are there any workforce changes? Not relevant. Are there any overtime arrangements? No. Do we consider lost sales here? Not necessary, because that was not required. Understanding? Because this was a simple case. Understanding? Any big questions? Sometimes in the exam question paper, some information like this will be given for a company selected, and you will be asked to prepare the production plan for different strategies, level production and in the chase, right? And then recommend them which production plan would be more cost effective. Now you know how to do it for level production. Production rate is constant. Production rate is constant. Any change in demand will be supplied through inventories. Sometimes if needed, back ordering will be considered, and the sales, if necessary, will consider. But in simple calculation, such condition will not be considered. Right. Let me quickly move to the second strategy. We call it chase demand strategy. Chase demand. As we have already discussed, and as this name tells you, chasing the demand, which means production plan is in line with the change in demand. When the demand is changing, you change the production plan. So that means when the demand is increasing, what you do in your production rate, you increase the production. When the demand is declining, you reduce your production rate. How? By adjusting the capacity. In that case, mostly in labor intensive, you reduce your workforce level. If you want to increase your production rate, you hire more people. If you reduce your workforce, if you want to reduce your production rate, you reduce your workforce. That is the main strategy. So, as you see here in slide number 36, chase demand strategy refers to changing the production output to match the demand for every period by varying the workforce size. How many workers you are going, and occasionally, if relevant, overtime or part-time labor and subcontracting would be considered as options. If so, we will have to consider the cost of them as well in production plan. Now, under this strategy, use of inventories may not be relevant. Backordering may not be relevant because you are going to produce exactly the same demand. So, no need to maintain additional inventory or backordering. But this is the main arrangement. You hire more workers when you want to increase capacity and produce more, and then train them, and then of course fire them or discontinue their employment when you want to reduce capacity. Understanding? There are some other consequences also, but this is the arrangement. Sometimes these kind of practices may reduce the employee morale. Because employees may not be happy with this option. Workers whose job employment opportunities may be discontinued after 3 weeks, after 3 months, 6 months. Right? Only when demanded they will be hired. So employees may not be happy with that option. Right? Factories, especially some industries, this is how the arrangement is done. So for each period, we need to identify how many workers required, and for that we will use this equation. We'll understand with the example. So workers required for the time period, workers coming from the previous period, plus how many workers hired and how many workers hired. That determines workers during that period. Right. This is how it happens. Right. Demand varies over a period of time, and at the same time, production rate varies according to the demand. Clear? Compare it with the previous situation. In previous situation, production rate was constant. Here, production rate chase the demand, follow the demand. Understanding? Let's consider the same example here and do the production plan, considering the second strategy. Chase demand. Are we ready? For that, I will use a template like this as shown in slide number 41. So, quarter, and then of course sales forecast for each quarter and the production plan. And for our cost calculation, we need other information like how many workers needed, and accordingly whether we have to hire or fire. So you can exam question, some simple questions like this, you need to use this kind of template to do that calculation and estimate the cost of the product. Right? Answer is given, but you should know how to understand the answer. Each quarter, and for that, the sales forecast, and accordingly, what is the production plan? Now, according to the production plan, whether we, how many workers required for each quarter, we have to calculate it and understand. Accordingly, whether to hire workers or fire workers. Are you ready? Can we do the calculation? Right. According to the information provided here, right, sales forecast and other details provided, we have to carefully select the relevant information. Anyway, we need to consider the sales forecast. So for each quarter, sales forecasts are given. 8,000 for the second, 50,000, third 120, and fourth 150. Right? From where I have taken these numbers? From the details given. And what is the production plan in chase demand? What is the production plan? Exactly the same quantity demanded should be produced. Chase demand. So production plan for the first quarter, 80,000 required. What is the production plan? Produce the same quantity. So as the other quarters. Now let's start with the first quarter. 80,000 required. Production plan is 80,000. How many workers required for the quarter one to produce 80,000? Now go back and check here. Is there any useful information that you can use for that? We need to produce 80,000 items, pounds, within the quarter one. Is there any information here to identify how many workers will be required? How many workers would be required? Well, somewhere here it says production per employee equals 1,000 pounds per quarter. What is that? Well, that is labor productivity. Can you understand? Labor productivity. Per quarter, per worker can produce 1,000 pounds. That is labor productivity. That's useful information for us. So, for the quarter one, we need to produce 80,000 units. Per worker can produce only 1,000 units. So, how many workers required? 80 workers. And check whether we have some workers at the beginning. It mentions here that at the beginning we have 100 workers coming from the previous year. So that is an important information. Now we need 80 for the quarter one. At the beginning we have already 100. Should be further higher? No need. Right? No need. But we'll have to hire 20 of remaining workers for the quarter one to make it 80. So that is how 20 workers should be fired. Understanding? If we go by the chase demand strategy. I hope that is clear. And I move to the second quarter, for which second quarter 50,000 category demand. 50,000 units needed. So what is the production plan? Exactly the same quantity. They are going to produce that within the quarter. They are not going to maintain inventories like for earlier days. just-in-time demand, just-in-time supply. So in such a case, how many workers required for the quarter 2? 50,000 per employee 1,000. So how many workers? 50,000. So 50 workers would be enough. Now, at the end of quarter 1, that means at the beginning of quarter 2, how many workers we have coming from previous quarter? 80. Right? Coming from previous quarter, we have 80. But for the second quarter, we need only 50. Is that clear? So we can, in this plan, we will have to fire 30 more workers during the second quarter. So fire 30 more to make it 50. Can you understand? I hope so. Coming third quarter, production sales requirement is 120,000. What is the production plan? Exactly the same, 120,000. And for that, how many workers required? How many workers required? Hello? How many workers required? 120 workers. 120 workers required. Now, at the beginning of third quarter, how many workers we have already? Only 50. So the remaining 70 should be higher. Remaining 70 should be higher. No firing. Moving to quarter 4, 150,000 units needed. Production plan is to produce the same. And for that, how many workers required for quarter 5? Quarter 4, 150 workers. At the beginning, we have only 120, so that we will have to hire 30 more to make it 150. Clear? So this is the production plan. Produce exactly the same quantity, and for which the cost of the plan would look like this. Right? We have to anyway produce 400,000 units, and the cost of production would be $2 per pound. Plus, what is the other relevant cost here? Workforce adjustment cost. Workforce, that is hiring and firing. Now, when we add together, per year, total of 100 workers should be hired. Now, go back and check hiring cost. Per worker, 100. Firing cost, $500 per worker. So, for the plan, we will have to hire 70 plus 30, 100. So, 100 is $100. Plus, we will have to fire throughout the year 20 plus 30, a total of 50. 50 into $500. And that comes as a total $835, $35,000. That is the cost of the production plan when they go by chase demand strategy. Very simple hypothetical case. When we prepare the production plan according to these two strategies and do the costing, for the chase demand we get the total as 835,000. For the chase level demand we get the total as 807,000. Right. Now, if you have to recommend the best production plan, which one you would recommend? The second one, because that is more cost effective. Here 870, here 835. So, considering the total cost of production plan, you recommend the second one because that is more cost effective. That is one. The total production cost is lower according to the second strategy. that clear? So sometimes there will be a simple question like this in the exam paper. All the information is being provided, requirements, options, costs and all. Maybe little more advanced than this because this is a very simple one. You should be able to do the calculations and recommend. Any quick questions? What we are discussing? Aggregate production planning. Why that is needed? What factors to consider? What are the different strategies? What are the different costs relevant? And finally, we came to identify two main production planning strategies. One is level production, and the other one is chase demand. And accordingly, do the production planning and calculate the cost of land. Hope that is clear to some extent. Consider this simple example. Right. This is for another situation. A candy kind of topics. Candy, good and rich. The demand data is provided here for the next 4 seasons. Demand per period is given 110,000 for spring, for summer 20,000, for fall 120, winter 150,000. The average demand is also given. I mean, calculated. Otherwise, we could have calculated it. So, average demand and other details provided. Current number of workforce given, production rates per employee per quarter given, beginning inventory that is 0, inventory cost $0.5 per unit on average inventory. Backward rate if you have to consider per order $5 per unit backwarded. Hiring cost 500, firing cost 1,000 per worker. No overtime, no subcontracting. Sometimes questions, such information will be provided. Now, if you are to prepare the production plan, aggregate plan for the first strategy, that is level production. What is the plan and what is the cost of it? And compare it with the second strategy, that is chase demand. What is the plan and what is the cost of it? And which strategy you would recommend to the company to meet the next year demand with the right supply. Calculations are given, just check whether you can understand. Shall we move to the first one? First case, level production. The plan is very simple. In level production, what is the production rate? Constant, that is equal to average demand. Right? Each season they produce the same quantity, that is 100,000 units. So for the first season, that is spring, what is the demand? 110,000. Production plan 100. Just check whether we have some beginning inventories here. No, we don't have. So beginning inventory 0, ending inventory, that is minus 10,000. Right? Production is lower than the demand. So minus 10,000. That means backordering. So when calculating the average demand, we do not consider this, because you remember now when it comes to under this case demand strategy, when calculating the average demand, average inventory, and especially when there are back orders, right? That means minus value. We don't consider it as minus value. We consider it as 0. So that average inventory is 0. Understanding? What is the option? Now we consider this as the back ordering. 10,000 as back ordering. That means we carry forward our supply, our customers will be ready to get things late next season. Otherwise, we will have to consider that as lost sale. That information should be provided. If so, the cost would be different, or sometimes we do. Right. Now, coming to second season, that is summer, of which the beginning inventory is minus 10,000, backordered from the previous season, minus 10,000. And what is production plan? It's same. The average demand, 10,000. Sorry, 100,000. Now, during the summer period, what is the ending item? End period? Or calculate it. Go back and check the equation. Ending inventory. Previous year ending inventory plus production rate minus projected demand during this period. And accordingly, you get the answer. Should I do that on code here? I don't think so. We produce 100 units, 100,000 units. For the same period, demand 20, coming from the previous period backward at 10,000, so that you get it as 70. Understanding? For the same period, what is the average inventory? Consider this as 0. So 70 divided by 2, 35%. Coming to 4, at the beginning we have this ending inventory coming from the summer, and during the period, what is the production? The same 100,000 units. For that, the demand is 120,000. So we will have to supply from the inventory also. What is the ending inventory? Hello? At the beginning we had 70. During the period, we might lose 20 out of that in addition to production. So the remaining item is 50,000. So what is the average? 70 plus 50 divided by 2, 60. Coming to winter, beginning inventory is the ending inventory of coal, that is 50,000. For the period, it requires 150,000. Winter production, 100,000. The remaining can be supplied to the inventory. So at the end, no inventory, zero inventory, no back orders. So average inventory would be 25,000. Is that clear? So this is the production plan for level strategy. Now calculate the cost of the plan. We need the production cost and inventory cost and back ordering cost. Isn't so? In this case, they have ignored the production cost because the same is applicable for both strategies. Otherwise, we can just calculate it anyway. What is the inventory cost here? Inventory cost that depends on the average inventory. Isn't so? The total of this into inventory cost is the inventory cost. 0.5 dollar per unit on average. Hello, are you following me? Can you understand it? පුළුවන් නේද? මම මෙතන දාන්න නැහැ නේද? කෝඩ් එක හදන්න නැහැ. So that is 50, 120, 110,000 and 120,000. So cost is 60,000. And coming to back ordering, $5 per unit back ordered. So that a total of back ordering 10,000. So into 50. So the total cost is 110. Regular production cost is not given, right? Yeah, because the total number will be supplied. That is why, in fact, here it says, in this example, we ignored production costs since we had to meet all the demand in future and we had only one source of production, that is regular time production. No subcontracting, no any other options. That is why they have ignored that cost. Right? Shall we move to the second strategy? Chase. Now, coming to chase, main thing is no inventory or no back orders. So the production plan is equal to the forecasted demand. Clear? I hope so. Right. String. Requirement is 110. Production plan is producing the same. Now, to produce 110, how many workers needed? And for that, we need labor productivity details. And it says production rate equals 1000 LBS per quarter per worker. That is the labor productivity. Right? 1000 units. So that to produce 110,000, we need 110 workers. How many workers available during that period? That we have to understand from here. So current number of workers 100. So we need to hire 10 more to make it 110. No firing. Okay. Moving to summer, we only need 20,000 units. That is the production plan exactly. And for that, we need only 20 workers. How many workers we have? 110 workers we have. So to make it 20, we'll have to hire 90 more workers. Understand it? Coming to spool, we need 120 units. Production plan is exactly that. and for that we need 120 workers. And at the beginning we have only 20. To make it 120, we need another 100 workers. Coming to winter, we need 150,000. At the beginning, the production plan is exactly that. We need 150 workers. At the beginning, we have only 120. To make it 150, we need to hire 30 more. So the cost of the plan would be workforce cost mainly, adding together hiring, so 10 plus 100 plus 30 into hiring cost. What is the hiring cost? 500. $500 per worker. That comes as 7,000. Hiring cost here 90 into 1,000 per worker. That is 90,000. So the total would be 106,000. Compared to the earlier case, that is regular production cost 110, here 160. So you would recommend which one? The first one. So level production strategy in this case, because that is of which the production cost is low. Now one might ask, these are very simple hypothetical cases. Practical situations would be highly complicated. And understanding. Now one might ask, why businesses have, why, consider which factors businesses would select which approach. Is that only the cost? Well, cost is one main aspect, but there are other factors that we studied here. Now I am going back to slide number 31. Where we just identify these two. So in addition to level strategy, we have change strategy, and sometimes we also consider some combinations. We call it mixed strategies. Which strategy to use depends on various other factors, especially the cost and company policy. Which means now some organizations may not be ready to change the workforce levels time to time. In that case, the only option available for them is inventory or subcontracting or some other. Whereas some organizations may have a strict policy on inventory. They are not ready to maintain inventory. Instead, they go by the employment level changes. It depends on the company policy, not only the cost. One more point. Now, one might ask, is it happening practically? Are all these manufacturing firms doing it manually like this? Well, no, answer is no. Right. But we identified here. Now, I'm going back to slide number 30. Right. In fact, there are many different techniques used for aggregate production planning. Slide number 31, right? There are many techniques of which we just identified the first one. How in traditional context, in manufacturing firms they do it. We call it trial and error method or informal technique. Although this is very traditional and very simple, this is the most common form of it. Common technique used in factories. Trial and error. Manually, they have different templates. They put all the relevant information and cost detail and calculate it and check which strategy would fit their requirement. Then trial and error. And informal arrangement. Very simple technique, but popular use even today. Go to factories to see how they do their production planning and all. Most of the time they have sometimes simple Excel templates, and accordingly they do the adjustment. In advanced cases or some other medium scale, large scale firms, which is very large business, very large companies like multinational companies, they have some advanced techniques. This was popular a few years back, few decades back, which we call mathematical approach, techniques like linear programming. Have you heard of it? Something like linear programming, where you develop some equations to maximize your profitability given all these constraints. What should be the quantity? Or to minimize the cost given all the other constraints, this is the formula. And by solving the formula, it gives you the answers in a more rational manner. These are the production rates, these are the inventory levels, these are the workforce, like that equation gives you the answer, and that is called linear programming technique. Very rational, systematic, but you need a lot of information and a lot of calculations to do that. When formulas are readily available, we can apply that. But more forward, more rational. Understanding? Unlike the trial and error method, you develop the equation, when you solve it, you get the answer. More than that, this is the most popular technique now, what we call simulation technique. Which means, you know, simulation? These are basically software solutions that you need to feed some important inputs to the system and select some scenarios, demand conditions, and various other capacity options available. You can feed all the information to the system and recommend them how to process the information for different scenarios. It will provide you alternative production plans and the related costs, out of which you will select the best. Simulation. More efficient and more rational. For different scenarios, what should be the response like? So that is the latest approach for aggregate production planning. But we discussed here was the basic informal technique. Although that is very simple and traditional, it is being used even today in medium scale to large scale factories, because that is such a simple technique. Is that clear? Any quick questions? What do we talk about today? Aggregate production plan. That means specifying the production three things. Aggregate production planning is all about specifying the production plan as out using this information that we already discussed. Right? Decide the production rate, decide the workforce levels and inventory levels and the cost of the plant using this information that we have been discussing from last week. So, right. Based on the production plan quantities, the next level of planning is there. We call it master production schedules, MPS, based on which they will go into the next level of detailed planning, not necessarily production planning. We call it MRP, material requirements plan. That we will cover quickly after small breaks. These two plan steps. 145, it will be here by 2 minutes. I hope you will be here by 15 minutes. Could you find these lecture materials from the Thank you for coming on time. We have around 1 hour, less than 1 hour, and let's try to understand what this is and then how these concepts and practices are used in production planning. Right. The area we are going to cover in this topic is production scheduling and material requirements planning. That is the next level of production planning. I will not discuss more about production scheduling. That's a little more technical. I will show how that is linked to the next level of planning MRP and move forward. Right. Are we ready? Since we have very limited time, I will quickly move. You will have to quickly follow me and understand the content. There will be a part of a question or a full question coming from this topic. Some calculations too. So you need to understand things within the classroom itself. Don't keep it for your homework. Understand the concepts, terms, calculations within the classroom itself. Right. Coming to production scheduling and material requirements planning, we will quickly understand why the resource planning is needed. That is a broad area. The need for resource planning in manufacturing. And then of course, what is MRP process? And then what are the different components used in MRP systems? Then how this processing is done? We call it MRP explosion. So how that is done? That will be the main content to cover. And beyond that, how the MRP and other solutions have been evolved, and especially advanced versions of them, MRP2, closed loop MRP, and then of course ERP solutions. I will not go into detail because we have a separate topic discuss about ERP, so that I am not going to provide you detailed information there. But MRP and its calculation, its usage and calculations would be discussed. So resource planning is one main part, and as you see it here, right, we have been discussing this so far. So now we discussed already in the production planning process, right? APP is prepared in consultation with sales and operations planning. That is what we have already discussed. Considering various different constraints from demand factors, on the other side from production related factors like production capacity and inventory, and then of course from the finance side looking at the cash flow arrangements, and then of course from the supply side looking at the supplier side, and then of course the procurement related activities, and on the other side the HR aspects. This final medium term plan, category level plan will be finalized, based on which the next level of detailed plan is called MPS. Stands for Master Production Schedule. And based on that, the next level of planning, we call it resource planning, and part of it is requirement planning, material requirement planning. Right? Should be arranged in line with the MPS to make sure you have the required resources and materials to start the production on time and legally. That is how it happens. So this is the link. This is the process of production planning. I hope this is clear because we have been talking about it since last week. Check whether you can understand it completely now. And these two areas are the ones that we are going to quickly cover today. If something is not clear, this is the right time to ask questions. Is it clear? Now we will experiment. Can you see the link? Can you see the process? Right. In it, I hope things are clear. So let's quickly try to understand what we mean by resource planning. Now, in the production planning process, once the medium-term aggregate production plan is finalized, accordingly, there comes resource plan, meaning now to produce the given quantity, we need various different resources like materials, machinery, workforce, logistics, and various such facilities. Together we call it the resource planning, a process that takes sales and operations plans, an aggregate production plan for that matter, and processes information in the way of the time standards, routines, and other information on how products are produced, and then plans the input requirements. That includes materials, that includes machinery, that includes workforce, that includes warehousing, transportation, all such requirements should be identified and then planned. That is called resource planning. And when it comes to main materials and all, we discuss two demand-related concepts here. One is called independent demand and dependent demand. Is it new to you? Have we already discussed it before? The dependent demand and independent demand for the products used read it and check whether you can understand. Now, at a factory, especially in manufacturing, right, the demand for the final product, finished product, is what we call the independent demand. That should be forecasted or estimated. Like what we discussed in the forecasting topic. Say for example, thumb rule, when it comes to furniture requirement. So the demand for these end items, furniture items, is independent according to this. Right? However, in economics, you identify the demand for end product is also not independent. It depends on what? Various different factors, right? Hello? In economics, you develop that equation, D equals this, right? Unit price, substitute, production whole, right? That is in economics. But in manufacturing, we assume the demand for your end product is independent, right? And that can be forecasted. Based on that demand for the end product, now the demand for these components. Say for example, now this chair is made of different components. Steel structure, plastic riding bag, back support, seat that is made of fabric, cushion, so likewise. So the demand for these individual components that we call dependent demand. Demand for the components. Right? That has to be calculated. Given the quantity of end product, demand for all parts and components that we call dependent demand, that should be calculated. Based on what? Based on the demand for the outputs. So that is what you get it here. So dependent demand. The demand for an item that occurs because the quantity required varies with the production plan for other items held in the firm's inventory. Component demand, we call it dependent. So in a dependent demand, this information will be highly useful. So we identify a parent and under that different components. Parent is any product that is manufactured from one or more components, any item. Component is any item that goes through one or more operations to be transformed into the part of a parent. like different components combining into one finished chair. Garment items, different parts of it, finally combining into one final garment. And we will take the water bottle, this lid, and the bottle and the label, three coming together as a final product. Can you understand? So likewise. Now if you remove, separate the components here, you will see different parts. Like each part is a component, and finally, when you combine together, you get the parent. So, for an example, see for a product like trumpet here, the finished product may comprise of two items. One is this part of it, and the other one is the bell assembly. So, this kind of items we call them sub-assemblies. Sub-assemblies. Few items together combined into one that has these three parts. We call it valve casing assembly, and this part is the bell assembly. Right. So together contributes to one final end product. So this is the parent. These are the components. Coming to valve casing assembly, that has mainly two parts: side assemblies and three valves. Three valves. I think these are the three valves and side assemblies. So an illustration like this that shows how the product is made of is called BOM. BOM stands for bill of material. This is not the first time you hear it. When we discuss about product design, we already identified it. So we need, for each product, a product like the product structure like this or bill of material like this should be prepared. So that is to understand dependent demand and independent demand. In mass production schedules, we specify the independent demand, and then in MRP, we calculate the MRP requirement, dependent demand. That is what we try to understand. So let's quickly identify what MRP is. The rest we will understand as we move forward. MRP. MRP, Material Requirements Planning, is basically a computerized software solution, as you know, that is specifically developed to assist manufacturers manage the dependent demand for various different components and parts. Check that you can understand. These are basically software solutions that is used to calculate component requirements for a given output requirement. In it, we use this thing called MRP explosion. That is a process that converts the end item requirements into material requirement plans that specifies the replenishment schedule for all the sub-assemblies, components, and raw materials required to produce the end item. Is that clear? When you discuss further, you can understand, but there can be certain terms that are not clear. Please feel free to ask. Is that clear to some extent? As we move forward, you will understand the rest. This process is called MRP explosion. Using various different inputs, it converts into raw material requirements. You will understand what it is. Now, coming to MRP explosion, it depends on various different information inputs. In other words, data files. Basically, MRP expression depends on aggregate production plan details coming through MPS, master production schedule, and then inventory records, and then of course bill of material details and other things, right? Especially these three things plus this one, other sources of demand. So accordingly, MRP expression will be done, and according to MRP plan, material requirements plan will be finalized. That is what we try to understand. Now, as shown in slide number 10, right, if you are to briefly describe what MRP is a computer-based information system that translates master production schedule (MPS) requirements for end items into time-based requirements for sub-assemblies, components, and raw materials. Time-based. For each week, for each month, what are the requirements? And accordingly, it answers these three questions. To practically implement this master production schedule, execute this master production schedule, what are the main components, materials, and sub-assemblies required? What is required? And how much of them are needed? And when they are needed? So this is a computer software solution that gives answers to these three questions. To execute mass production, so practically implement mass production. As we move forward, you will understand. Is it clear? To understand how MRP operates, this overview would be useful. Now, this is where the calculations are done. This is the computer software that depends on various different data files, especially these four plus this one. In a way, these are inputs to MRP. So, inputs to MRP, and this is where the processing is done, based on which the output of MRP is generated. Outputs are basically reports for various different components, how many items, what items, when they are needed. Right? So these are the output reports that can be classified in different ways. MRP by period report, MRP by date report, and planned order report, purchase advices, and other reports, which we divide basically into two categories. I will explain it later. But for the time being, you need to understand what are the data files, what are the inputs to the MRP, and how this happens, and what are the outputs. Right. Slide number 12 shows you what are the inputs, key inputs to MRP. One of them is this master production schedule that I will discuss in detail. So let's quickly identify what are MPS and what is the role of it here in MRP. What you know is APP. So that we studied in the previous topic. APP. So to meet the market demand for the next 3 months to 9 months to 12-month period, what are the category demands? Right? That minimizes the cost. Right? So based on that, a detailed production plan should be finalized. That is what we call MPS. Right? So slide number 13 shows you what it is. MPS. It's a time-based detailed production plan. Detailed production plans that how many end items, finished products should be required. Right? Now, if I give you little more details about it, slide number 14, time-based plan specifying how many end items would be required and when. MPS is established in terms of specific products. APP both basically for category demand. Let me show you one example here. Look at the first one. Now these are the figures coming from the APP. That is for the category. Say now for the month of January, this is for amplifiers. Amplifiers, electronic products. So for the month of January, APP specifies 1,500 units. Total of 1,500 units would be required. For the month of February, 1,200 units. And NTS is a detailed plan that specifies how these 1,500 units would be divided among individual product items and within a shorter time period. Like, let's say now for the month, demand is divided into weekly. And this is for category, these are for individual product items. Now they are producing 3 product items when it comes to amplifiers: 240 volts, 150 volts, and 75 volts. Those are the individual product items. Whereas this is given for the category, amplifiers category. Now MPS specifies for the month of January, for each 4 weeks, what specific end item would be required. Is that clear? Because APP is cascaded down to individual products and week wise. So that shows us the exact quantities required of the final product. End item. Clear? This 1,200 cascading down to weekly production requirements for each 3. This is how. Now when we taking it down, the total should be equal to the category demand. Within the month of January, we are going to produce a total of 1,500 units. Within the second month, 1,200 units. This detailed plan is called what? ME. I'm not going to discuss what techniques are there to specify that, how to do that and all, because that is technique. Different industries use different techniques. Right? However, to use MRP calculations, this is one of the main documents we need. From APP, we need to cascade it down to MTS, based on which we will do the calculations in MRP. I hope you can understand this. I can straight away go to the final calculation, but you don't understand this. That's why I'm just explaining you, introducing you these inputs and these calculations so that you can quickly understand the rest. Right, this is another example. These are the APP figures for the month of October, 2,400 for this production. These are kind of bicycles. A total of 2,400. Dividing them into individual product items like tricycles, wagons, and scooters, and for each week, these are the quantities for the month of October, specified in MBS, right? And for the month of November, these are the MPS figures, and for December, these like end items. So that is one main input to MRP calculations. Is it clear? I hope so. In addition to that, there are other data files that should be connected to that. One is BOM, bill of materials, that you already know. What is bill of materials? Bill of material is the document that specifies to get an end item, what are the main subassemblies and what are the components and materials. Right. Say for example, that can be presented as a product structure tree or assembly diagram like this. That shows what is the final product. In item that is chair, that is made of three main sub-assemblies: back assembly, seat, and leg assembly. Back assembly, seat, and the leg assembly. And leg assembly is made of two parts: two legs, one crossbar. And seat is a separate component. Coming to back assembly, that is made of three parts: two side rails and crossbar and three back supporters. Can you understand? So such information is needed to calculate accurately how many different materials are needed. And that document is called bill of materials. Each end item, we need to have this information that should be fed to the system. Now you know the parents and the components, or what we call children. Right. Coming to the other inputs requirements, on-hand inventory. That's very important information. For each individual material, component, what we have in our hand, on our hand, we need to have such information. Now in factories, where such information is available? At the warehouse. Right. The real physical counts of inventory should be connected to the MRP calculations. And for that, you know, there are some advanced software solutions. We call them WMSs, warehouse management systems. So computerized information is there for individual materials, components. How many of them are available physically? Real-time information is updated to the WMS, and such data files should be connected to MRP calculation so that we can accurately calculate how many new items should be ordered and when they should be ordered. That is it. In addition to that, fourth one, expected receipts, also known as outstanding purchase orders. Expected receipts. What is that? Also known as scheduled receipts. We have ordered, but they have not come to the warehouse yet. So that is a physical count that is not there, but we have already ordered. So such updates are also important to do the calculations accurately. Clear? In addition to that, we also need lead time information. What is lead time? Lead time, when we place an order today, when they will be delivered. Understand? So lead time, coming to slide number 19, could be of two types. One is called purchase lead time. Purchase lead time, or we call it procure lead time. For items that we are going to purchase from outside, there is something called procure lead time. For items we are going to manufacture in-house, there is a production lead time. Procure lead time. Assume that I purchase this lighting fan from a supplier from India. If I place the order now, I will receive it after 14 days only, because the supplier is supplying from India. So procurement lead time is 14 days. I manufacture this steel structure at a separate factory, our own factory. It might take 4 days supply. So the production lead time is 4 days for that steel structure. Is that clear? Right. That information is needed to accurately do the calculations. Understood it? So those are the, I mean, these are presented in a different manner. Now this is what, I mean, say for example, what you see here is a time-based product structure that shows bill of materials as well as lead time together. So in case of exam questions, some information like this will be given for you to understand, okay, what is the end item, what are the components, and what are the lead times. How you can understand this? What is the end item? What is the final product? That is A. Can you understand it? In A is the end item that is made of two components, that is B and C. To manufacture it, it takes 1 week. Lead time is 1 week, production lead time. That is how you should understand it. I'm helping you to quickly understand it. If I ask you to understand, you don't understand. Right. B is made of two parts, D and E. Together it takes 2 weeks to produce 1 unit of B by combining D and E. So lead time is 2 weeks. Production lead time. And D has 1 week of lead time and E 2 weeks of lead time. Coming to C, that is made of E and F and 1 week lead time. For E 2 weeks, for F 3 weeks. That is made of two components, G and D. D has 1 week lead time and D has 1 week lead time as above, and then G has 2 weeks lead time. So when you present the information like this, right, you can clearly understand. If you plan it today, right, to order different items, it might take at least 8 weeks to complete the, complete the production given the lead time for it. Is that clear? Such information is highly required to do the MRP calculations anyway. Clear? Since you have not been to many factories, production units, somewhat difficult to imagine it, but hope you can understand. Think of a Colombo company produces this year. So for different components, different lead times. So according to this calculation. Now this is of course about one product. Do they produce only one product design, one product item? No, of course they may be producing various different furniture designs. 30 to 50 different furniture designs, and each design may require different parts, different components, different proportions. So calculating all these things manually is not possible at all. And that is why these computerized solutions to accurately and conveniently estimate material requirements. Clear? So likewise. I hope that is clear. We discussed all 5 here. Right. So these are the inputs to MRP. Clear? So after processing, we call it MRP explosion. We'll identify some simple calculations and all do that. But computer solutions will give you such details as outputs. So MRP outputs, we divide them into primary outputs and secondary outputs. These are basically reports. Planned order reports, order releases, and then changes if any. So this is the main output we generate from MRP systems. It is a schedule indicating the amount of different items or purchasing orders and timing of them that helps us place the orders. In addition to that, other reports like order releases, authorization for the execution of planned orders, how to place the order, give them the authorization to release and all. So likewise, in addition to that, there can be secondary reports like these: performance control reports, planning reports, exception reports, depending. So like that. These are secondary outputs we can expect from the system. So with all these inputs, what I try to help you understand is how the MRP processing is done. And for that, I will show you one or two examples and help you how to do the calculation manually for simple hypothetical case. Practical situations are much more complicated. Right. MRP processing. So, for given end item requirements as specified in MPS, we try to exploit them into time-based material requirements, assembly requirements, offset by the lead time. And for that, when we do it manually, we use a template like this. We call it MRP record, and the main elements would be like this. Since it is first time, that is new to you. But when we do one or two calculations, this should be more easy to understand. So these are the different templates, different elements we use in MRP records. Different things: GR, gross requirement, scheduled receipts, projected on hand accordingly, and net requirements, and the other two. So what they are described here in the next slide. Slide number 86. Gross requirements: total expected demand of each item, each sub-assembly, each material. Scheduled receipts: we have ordered, not yet received, but on the way. Items in transit. Projected on hand: the items that we already have on hand, and accordingly net requirements. Out of the GR, when we arrange, when we compare, when we set off them with the other two, what is the net requirements? And accordingly, the plan order receipts and plan order offset by the lead time. And plan order releases. Now, in an example like this, very simple, we'll try to explain how these calculations are done. We have 20 minutes. I think that is enough. We'll have to quickly look at the example and the solution given and understand it. Right. We are considering a simple product. That is a shutter that is made of two parts, two frames, and 4 wood sections needed to manufacture 1 unit of shutter. Now, consider the information here. Assume that we expect to produce 100 units of shutters by the 4th week. And another 150 units by 8th week. Let's keep it separate. Don't worry about for a while. Just consider the first one. And the lead times are given here: shutters 1 week, frames 2 weeks, wood section 1 week. No other information like beginning inventories, stocks on hand, right? Transit orders, no, not yet. Right? So, if you are to use this template and do the calculations, this is how you should do it. First of all, you have to do it for the end item, that is shutters. That is where you begin. Clear? Based on that figures, you consider it for individual components. Right. I will show it for the shutters. Now, no beginning inventories. No beginning inventories according to the information. But what we know 100 units of shutters are needed by the fourth week. Okay. So coming to shutters, 100 units of shutters needed by the fourth week. Quickly follow me, you can quickly simply understand it. So this, from where this figure comes? MPS. Master production schedule shows you 100 units are needed by fourth week. Now accordingly for shutters, what is the gross requirement? That is 100 units. Right? No schedule receipts, no projected on hand, so as the net requirements remain same, 100 units. So that plan order receipts, we should be able to receive that 100 units by the fourth week, beginning of fourth week. And to receive that, we should have started producing it. And for that, we need to go for the lead time. For shutters, that says, hello, 1 week. So at the beginning of third week, we should have started them to receive them by the beginning of fourth week. Can you understand? So that plan order releases should be third week. Then only they will be received by beginning of fourth week to deliver to the customer. Clear? That is for the end item. Now based on that, we have to move the other components and sub-assemblies. There are two parts here. One is frames and the other one is wood sections. Right? So shall we move to the frames then? Frames, lead time is 2 weeks. No information provided here about beginning inventories or hands-on inventory. No. So to start producing this 100 units of shutters by third week, how many frames are needed? According to bill of materials, per shutter, how many frames? 2 shutters. Two frames. Right? To produce 100 units of shutters, how many frames then? 2 types of them. Can you understand? So, gross requirement is 200 frames by the beginning of third week to start the production under PI. Hope you can understand. That is the gross requirement. That is the gross requirement. No schedule receipts, no projected on hand, so that the net requirement equals the gross requirement. Understanding? So the net requirement should be ready by the third week, beginning of third week. When they should have ordered it to receive it by third week. By looking at lead time, that is 2 weeks, right? Originally they should have ordered it by first week, beginning of first week, because it takes 2 weeks to deliver. Understanding? So that to deliver this 200 units, they should have ordered first week. Okay? I hope so. Coming to second component, that is wood sections. Now, according to BOM, per shutter, how many wood sections? 4 sections. Right. And now, to deliver this 100 units, it comes from here. Understanding? To deliver 100 units start production of 100 units by third week, how many wood sections should be readily available? 100 into 4. 100 into 4. 400 units should be available by third week. Clear? It further says no beginning inventory, but that's a scheduled receipt by 70 units. It says, right? It says, by the first week, there is a lot of a batch of 70 units to be received. So from the first week, that is scheduled received, and at the end of first week, you will have that on hand. And there onwards, you will have 70 and 70, and by the third week also you have 70. Now, what is the net requirement? The original required 400. We have already 70 on hand, so the net requirements become 330 only. That should be readily available by the beginning of third week. Considering the lead time, when they should have ordered it or start production, 1 week time that. That means second week. Clear? So by looking at this side of it, what is MRP? I mean, which quantities and when they should be ordered and how many of them? What we did here is manual calculation, but you should be able to now give me a report saying what? To produce 100 units of shutters by the starting from the third week, we should have ordered 200 frames by the beginning of first week. Okay? We should have ordered 200 units of frames by the beginning of first week. And coming to wood sections, how many? 330 wood sections ordered by the beginning of second week. Then only they will be able to start producing this 100 by third week and finish it by fourth week and again. Backward calculation. Backward estimation. More than estimate, it's a calculation. Understanding? So for the next order, that is 150 units by 8th week, we'll have to do it separately. To deliver 150 units by 8th week, no other information, so that the requirement become 150. To deliver it by 8th week, it should have been started by 7th week. Now, calculating its frames and wood sections, information is provided, so you can quickly do it. Accordingly, what is the MRP report? For this order, what is the planned order? We should have started, we should be able to start 150 units by 7th week. And for that, we need to order 300 units of frames by the beginning of 5th week and 600 units of wood sections by 6th week. That's the plan. Is that clear? So such calculation is what we call MRP calculation. When we do it very simple manual calculations. But these are computerized solutions that gives you more comprehensive answers for complicated situations. Right. To understand this, I will provide little more details here in the next slide, slide number 730. Right. At least consider the first order here for the same product. consider some little more advanced detail, additional details. We will try to prepare MRP records for the first load at least 100 units of shutters by the 4th week, considering beginning inventory for shutters and frames and wood sections and schedule receipts like this. Give it a quick try. We have 7 minutes only. Use a template and MRP elements. And the same can be continued for the other orders also, up to 8th week, 9th week. First of all, read and understand the details. What is the end product? Hello? What is the end product? Hello? Shutters. Okay. That is made of 2 components, parts, frames and wood sections, the same is. Other information also same. Lead time, shutter 1 week, frames 2 weeks, wood section 1 week. So from where to begin? For the shutters. Week wise 1, 2, 3, 4, 5, 6, 7, 8. For shutters. We need to use MRP elements like gross requirement, and what else? Scheduled receipts, if any, according to the projection on hand, and thereby net requirement. Then the planned order releases, receipts, and planned order releases. This is for shutters. And in the same manner for the 2 other components like frames. And then wood sections. I will do with you only one. So we need to have templates like this. Now, luckily in our example, only 2 levels are there. So, only 2 levels. Sometimes in exam questions you may see more levels than that. So, frame is made of, let's say for example, in this case, final product is made of 2 parts, and each is made of some other parts. So, likewise, level should be 2, level 3, 4, 5. According to the calculations, will become more complicated. But luckily here we have a very simple example. Only 2 levels: end product and 2 components. Consider the additional information and do it for the first order, that is 100 units by fourth week. So before that, we can show the beginning inventories here. Now for shutters we have 40 beginning inventory, and frames we have 18 sets, and for wood sections also 30. But for the time being, let's focus on the shutters. Now according to the order requirement, how many units required? By the fourth week of month, 100 units. That is the demand for shutters, and accordingly, for shutters, what is the gross requirement? 100 units. Since we have 40 units beginning inventory, from the first week onward, products on hand would be 40. For shutters. For the second week, we have 40. For the third week, we have 40. For the third week, we have 40. Products on hand. So accordingly, what would be the net requirement? That will be reduced to 60. Only 60 would be required. That should be readily available by, that should be received by the fourth week. In order to receive them by fourth week, then they should have started producing it. When you offset with the lead time 1 week prior to that, so that means by third week, or planned order receipts or the releases should be third week. When you offset it with the lead time. I will take only 3 to 5 minutes. Right. Is that clear? So that is about the shutters. End item. Now we have to plan the material requirements, frames and wood sections separately. Can we quickly cover that also? Frames. Beginning inventory we have 80. So that the first week we have 80. Right. Now from this 60, we have to now convert them into frames requirement. Right. According to the BOM document, 2 frames needed for one shutter. So that how many frames required? 60 into 2, right? 60 into 2, and that should be the gross requirement. Gross requirement equals 60 into 2, that is 120. That should be ready by the third week. That should be ready by the third week. Are there any scheduled receipts of frames? According to this, it says frames 50 units by second week. That's a scheduled receipt. Maybe frequently they deliver some amounts, right? So that there is another 50 units of scheduled receipts by the second week. That is 50 units scheduled receipts. I draw it because you can understand. So by the second week, what will be the products on hand? Products on hand that becomes 130. 130. And third week, by the third week, we have already 130. How many are needed? Well, only 120 needed. So that should we purchase more shutters to deliver this order? We have already 130, we need 120, so the net requirements become actually minus 10. We don't have to worry about it. We don't have to order. From the remaining inventories, we will be able to supply this 120. No need to order more. Can you understand it? So, actually, this quantity is there so that no planned order, no planned releases. I mean, because the quantity is already available. So what happens to this additional 10? That becomes product on hand from fourth week onwards, isn't so? Right? 10 items will be there. So that no frames required for this order. I will quickly show that for the wood section also. Now, how many wood sections required? How many wood sections? According to the BOM, 4 wood sections per shutter. So that 60 into 4, 240. 240, isn't so? Gross requirement is 240. Am I correct? By third week. Because they are going to start it by third week. So, products on hand, since we have beginning inventory 30, from the first week onwards we have 30. Second week we have 30. Before that, let's check the planned schedule receipts. Good section there is one, but that is by 6th week. So that we don't have any other quantity, but we have 30 only schedule receipts. Sorry, products on hand. And accordingly, net requirements become 210. This quantity should be received by third week. And in order to receive it by third week, when we should have ordered? Lead time, wood section 1 week. So we should have ordered it by second week. And order releases. Is that clear? So likewise, we can finalize it for the first order. So what is the plan then? To provide this 100 units by fourth week, we need to produce another 60 units of shutters starting from third week. And for that, we don't need any frames to order, but we need to order 210 wood sections by the second week. That's the plan. Can you understand? It's a very simple example, only one product, only 2 components, but companies, manufacturing companies, producing 10, 20, 50 different products. Each product has various different material requirements, so manually calculating this is not a possibility. That is why these kind of computer solutions, when you feed information and your end item requirements, it generates alternative plans, and that gives you the answers for these questions. What are the questions? What items needed? How many of them? How much of them are needed? And when done? Understanding? So such calculations we call MRP processing. So these are basic simple software calculations, software solutions that they were initially introduced in sometime 1970s and 80s, and then advanced versions of them were introduced in 1980s and beginning of 1990s. We call them MRP, closed loop MRP, and then MRP2, material resource planning. And after 20th century, more advanced version of them embedded to ERP solutions. Now, in ERP module, in ERP solutions, MRP estimations, calculations are available in a separate module that is connected to the main ERP. Clear? I'm not going into details to explain things like this because you know. What I just explain you is what MRP and how such calculations. In fact, there will be a simple calculation sometimes in the exam that you should be able to prepare MRP processing and use the sum, use the time. Hope to see you next week. That is the last session we are going to have. So after completing a part of our topic at least, I will discuss the paper structure also next week. I complete this topic here. Okay, we will complete the rest.